In this video, we'll walk through Buffett's core stock picking framework, built around just 3 key numbers, and show exactly how to apply it using TradingView. Warren Buffett has never relied on complicated indicators. He hasn't chased trends, and he certainly hasn't needed complexity to build extraordinary wealth. In fact, his philosophy is quite the opposite. Great investing is simple, but not easy. Buffett doesn't think of stocks as tickers on a screen. He thinks of them as ownership in a real business. And according to his approach, a great business typically reveals itself in 3 ways. It generates strong returns, it uses little debt, and it can be bought at a fair price. That's the entire framework. Now let's see how we can apply it inside TradingView. By the way, guys, click on the link below in the description to get my free TradingView Beginner's Guide. The first metric he uses is return on equity, or ROE. This measures how efficiently a company turns shareholders' capital into profit. In simple terms, for every $1 invested, how much profit does the business generate? On TradingView, we are going to use the stock screener here to find these stocks. So, the first metric, ROE, return on equity. And for this, he looks for stocks with a 15 to 20% or more return on equity. So, we'll look here at 20 to 30%. That's the first metric. Now, the second metric is debt to equity. This acts as a safety check. Even strong businesses can fail if they rely too heavily on borrowed money. Again, we go back to this screener and look for debt to equity ratio. And we are looking for here below 50%. Why? Because while debt can help a company grow, too much debt can become dangerous, especially during economic downturns and recessions. And the third metric is price to earnings, PE. And again, in the screener, we'll find PE here, and we are looking for a PE ratio of in the low to mid 20s. So 20 to 25. And there we have it. We have 15 stocks, symbols that meet that criteria. Now, the great thing about TradingView screeners is you can click on any stock on this list we have generated, and we can review the charts instantly, and also the financials. So now that we have a list of stocks, we can immediately begin to review them by clicking on each stock and looking at the chart and the financials. So the framework becomes strong return on investment, low debt, and a fair price. When a company meets all three criteria, it may represent a high-quality long-term opportunity. Identifying great business is only part of the equation. The real advantage comes in holding it over time, not trading frequently, not reacting emotionally, but allowing compounding to work. And this is one of the key principles that Warren Buffett has used to generate his wealth over many decades. Buffett's strategy doesn't rely on complexity. It relies on discipline. Find strong businesses, avoid excessive risk, pay a fair price, and most importantly, be patient. That's how long-term wealth is built. If this walkthrough helped you clarify how to use TradingView through a long-term investment lens, consider exploring more, because simple principles applied consistently can produce powerful results over time. If you found this helpful, be sure to like and subscribe for more TradingView tutorials. Thank you for watching. See you on the next one.